How do you get real estate that doesn't fail? Because even in a rapidly growing market like Dubai, many properties fail. We've identified 4 types of Dubai real estate with the lowest failure rates. This is all backed by data, because when you invest in real estate, you don't want a property with results like this or like this. You wanna outperform the market or get stable returns even in a global crisis. But why should you listen to me? I'm a former management consultant and banker, and along with my team, I bring an analytical, data-driven approach to investment decisions in the Dubai real estate market. By the end of this video, you'll have a clear idea of what to buy to make your investment successful, starting with beachfront properties. And this is the most straightforward way to outperform the market. Waterfront properties are the most in demand and often the most lucrative real estate opportunities in many cities worldwide, which is not a big news, but in Dubai, the situation is special. Let's look at the Dubai map. Here's the city's coastline, and of course, a large part of it is covered with residential buildings. The issue is that much of it is almost fully reserved for locals. If you are a US, EU, Indian, or any other non-GCC citizen, you just can't own property there. These areas have plenty of villas and even mansions, but no high-rise residential towers. As a result, beachfront properties in Dubai are extremely limited. There are more than 900,000 residential units in the city, yet only about 35,000 of them are in beachfront areas. That's around 4%, and growth in these areas ranges from high to crazy high. For example, Blue Waters. Since 2021, it grew by 141%. It wasn't initially planned as an ultra-luxury area, but now prices have reached around $1,500 per square foot. Then Palm Jumeirah, Dubai's prime tourist destination, grew by 68%. Emaar Beachfront, a new master community at the entrance to the Palm, increased by 55%. And the ultra-luxurious Jumeirah Bay showed 154% growth. Is the prime island with the Bulgaria hotel and residences. Prime areas are another interesting category, and we'll talk about them later. But all these areas are successful. What's more interesting is how the communities that performed below expectations still turned out. One of them is Port de la Mer. The original vision was to create a one-stop leisure area near this place, and it didn't fully come to life, and the residential layouts aren't ideal. But this area still grew in line with the market. This shows that even if things don't go exactly as planned, beachfront areas at least bring you the market average. And right now, there are 2 new beachfront areas that look especially promising. First, Maritime City. It's an artificial island where Omniad and its sister company Beyond plan to create a master community. They plan to have a private beach accessible only to residents and plenty of water amenities. Some Omniad buildings will be developed in collaboration with Dorchester, an ultra-luxury hotel brand, and Beyond will be relatively more affordable. The second opportunity is Dubai Islands. It's a set of 4 artificial islands that are expected to be Dubai's next Palm Jumeirah, with hotels, villas, and residential buildings. Some will have access to public beaches, and some will have their own private beach. But there is one more type of real estate that consistently shows even higher value appreciation than some waterfront areas. That's villas and townhouses. Let's start with the average numbers, which make the case for villas pretty obvious on their own. Since 2021, villas and townhouses have increased by 69% in value, compared to the 36% growth shown by apartments. When averages are that high, even underperforming villas still deliver decent returns. Let's look at underperformers. For example, Damac Hills. Villas haven't performed that great recently, but still showed 46% growth since 2021. Or villas in Arabian Ranches too. They grew by 44% over the same period, which is low for villas and significantly below the villa average. But it's still much higher than the average apartment growth. Even villas in Falcon City, where there isn't much around or within the community, they showed 56% growth over the last 3 years. And even if apartments in the same area aren't just growing slowly, but not growing at all or even declining, villas can still have a completely different trend. For example, in Motor City, while apartment prices are going down, villas have gone up by 43% since 2021. Alright, but Those examples are from less successful areas. What if apartments in the neighborhood are significantly outperforming the market? Would a villa still make that much sense? Take Dubai Hills. Apartments there have grown by 63% since 2021, which is 1.7 times higher than the market average. But villas and townhouses grew even faster, 86% over the same 3 years. It's also interesting to see how villas and townhouses handle crisis periods. Let's look at rental rates. On the left chart, you see average apartment rental prices, and the highlighted time frame is the COVID-affected period. The average apartment rent went down by 32%. Over the same period, villa rents dropped by 16%, which is half as much. Of course, villas can be quite expensive. Typically, you need at least a $1.5 million budget. And if you're committing to such a high-ticket investment, you want someone by your side who knows the market, understands the numbers, and is willing to work very hard to make your investment successful. And my team is exactly like that. We'll handle the property selection, run all the numbers, and secure the best unit for your goals. Basically, we take care of everything end-to-end, and we do it absolutely free of charge. Drop us a message via WhatsApp, scan the QR code, or click the link in the description to get a free consultation with my team. And my team could tell you there is another type of property that offers similar advantages to villas, but is more affordable. I'm talking about bigger apartments. Let's compare 3-bedroom apartments with 1 beds during the COVID crisis, just like we did with villas. Business Bay. While 1-bedroom rental rates dropped by 25%, 3 beds went down by 16%. Downtown, 1 beds decreased by 20% versus 8% for 3 beds. And Dubai Marina is an even more striking example. 1 beds dropped by 31%, while 3 beds decreased by only 4%. The reason is that bigger units like 3 beds are usually rented by resident families, and resident families are the most stable type of tenant. They're more selective about what they rent, but once they choose, they tend to stay in place. There is one downside though. Rental rates for bigger apartments are typically lower compared to smaller units, often by about 1 percentage point. However, the value growth of bigger units is faster. In 15 major Dubai neighborhoods since 2021, 1 beds have grown by 40%, while 3 beds have increased by 47%. This trend is driven by more families moving to Dubai, and another demographic group actively relocating to the UAE is high-net-worth individuals. In 2024, Dubai ranked as the top destination for relocating millionaires. The net increase was 6.7 thousand people. Overall, the city now has over 70,000 millionaires. That's an 80% increase over the past decade. And because of this trend, the fourth type of property I want to talk about is prime projects. There are several areas in Dubai with exceptionally high average ticket size. These include Al Barari, located quite far out in the desert. It's a super green community, mostly made of villas. It's exceptionally green for Dubai, with more than 500,000 species of plants, plus rivers and lakes. The median price is $2.2 million. Jumeirah Islands, 50 man-made islands with villas, surrounded by artificial lakes, 5.2 million for an average villa. Jumeirah Bay, an artificial island of the Jumeirah coast. It's where the Bulgari-branded residences are located. The median price is $7 million. And Emirates Hills, a community of villas and huge mansions, one of the most prestigious in Dubai. Median price is around $12 million. Now let's compare their performance to the market. As these areas, except Emirates Hills, are a mix of apartments and villas, we'll compare them to the Dubai average. Emirates Hills is the only one growing in line with the market. The rest are outgrowing it by anywhere from 1.5 to 3 times. Rents are also growing there, but ultra-luxurious units typically don't offer the best rental yields. These investments should be viewed primarily as value appreciation opportunities, not rental properties. One major emerging ultra-luxurious community right now is Oasis by Emaar. The developer is investing $20 billion into the area, and the plan is to create long man-made lagoons with beaches and build the villas around them. They also plan to make it super green, with greenery covering 20–30% of the community. The median price of villas in Oasis is $4.4 million, but there are other great areas in Dubai at a more affordable price point. If you want to learn which ones are especially attractive for investment in 2025, check out this video.